Welcome back. Well, the big news coming in for the power sector yesterday was the fact that the Supreme Court cleared the decks for CERC to look at the PPAs for the Mundra power plants, and that could impact the stocks like Tata Power and Adani Power. We already saw the surge in these stocks yesterday, but we are waiting back to understand from the management what this could mean. Now, we heard the management on the con call yesterday. Mr. Pradeep Sinha, the management lead of Tata Power yesterday, said that the basic understanding is that all the recommendations of the high-powered committee will be accepted by all stakeholders and that they are expecting a resolution in 8 weeks. Now, this is a big positive because the street has been banking on the resolution for Mundra power assets, both for Adani Power and Tata Power. In fact, we have heard a lot of positive comments from the brokerages as well. For example, Axis Capital rather, had a negative value to the Mundra assets close to 40 rupees. Kotak had a negative value for Tata Power's Mundra asset as a 37 rupee negative number. So that is why it is very critical for resolution of the Mundra assets. Citi, for example, says that even in the most pessimistic case, they can see a positive PBT impact of at least 3 rupee per share, telling you that the EPS of Tata Power can go up by around 3 rupees. Nomura, on the flip side, believes that it could be close to 4 to 4.5 rupees is what we can see the positive EPS impact. Deutsche Bank also says that the Mundra resolution could lift the value of the entire company by around 7,000 crores or 26 rupee per share. And Macquarie says that this is a clear positive, though the extent of benefit is something that you'll have to wait by and see what happens and what recommendations are accepted and what level of tariff or revision is what the company gets. But they believe that a better way to perhaps play this entire bit is through Adani Ports, because the overhang for Adani Ports has been the fact that they have been giving in money to the other group companies like Adani Power, and we saw the impact in that yesterday as well when the stock rallied around 7%. So all in all, if you look at all the brokerage comments and the management comments, it looks like that Mundra is nearing resolution, and that is a big positive. In fact, on that note, let's hear out the management itself on what they had to say on the con call regarding the Mundra power plant.
The court has said that we can go ahead with the changing of the PPA, and the same has to be submitted to the regulatory commission, the competent authority. And the competent authority, in this case CERC, needs to decide on the same within the 8 weeks period. So that's what we understand at this stage. There is a draft supplementary PPA which is part of the HPC report, and that contains all the changes that has been given as a recommendation by the HPC. And it is now for the states to take a call on what changes they would like to incorporate in the supplementary PPA and take it to the competent authority. The whole process has to be completed in 8 weeks. It has not been divided into each activity. The HPC report has been finalized through a process of consultation between various stakeholders, and that included the consumer groups, included all the state governments and the distribution companies, included the lenders, and included the suppliers of power, the developers of these projects. So there has been huge amount of consultation process which has been there, and hopefully whatever is now a decided thing between the beneficiaries and the seller of this power, there is a good understanding, and it should not take too much of time for them to come to a final settlement and approach the CERC.
The current outstanding in Mundra is about 8,000 crores, and the SPV debt is about 700 million.
Let's get back to earnings then. In the consumer space, Emami and Pidilite, they'll be in focus as the companies will be reporting their quarter numbers. Let's start off with Emami Mangalam. What do we expect this time around?
Well, Nigel, you know, for Emami, it's a muted quarter which is expected, and the stock price tells you that from the start of this year, the stock is down about 40-odd%. The consumer space, we've been talking about valuations of upwards of 35, 40 times FY20 earnings. Emami trades at just about 24 times FY20 earnings. So a muted quarter expected on a high base. Revenue growth of just about 1.5% expected by the street. Anywhere around 635 to 640 crores is on the cards. EBITDA is likely to decline by about 7.5%. The number that the street is working with is close to around that 190 odd crore mark. Emami, remember, enjoys the highest gross margins in the industry, spends the maximum amount of its revenue on advertising and has the highest EBITDA margins out there. We're expecting a correction of about 270 basis points. 29.1% is on the cards. And on the back of that, 21% decline in the net profit is what the street is working with. Domestic volume growth actually seen to decline anywhere between 3 to 5%. This comes on a high base of a 10% growth. Add to that, the revenue growth will be led by 2 to 3% price hikes that the companies take in. EBITDA margins would be lower on account of lower gross margins, higher mentha prices, crude has been higher, packaging costs will be higher for them, and also the company is likely to push more money into the advertising route. That would impact the EBITDA margins. More important to watch what exactly happens in Kesh King, because the company had relaunched this product in the second quarter. Let's see whether it's got some traction or not.
Okay, Mangalam, thank you so much for that. But also tell us about Pidilite. Will the jor stay this time or will it fall off?
Well, that's what the street expects, you know, the jor to stay, or maybe MC, let's put it that way. The stock is around 22% off its record high, and Pidilite has a very uncanny resemblance to Asian Paints in its input cost profile as well as the demand profile.
Yeah, I'll just tell you what.
Right, all right. Okay, so 12.5% total income growth is what we're working with as far as Pidilite is concerned. EBITDA margins are likely to decline because the EBITDA is likely to fall by about 5.5%, and that's primarily because the input costs, just like Asian Paints and all the other paint companies, are crude-based as well as currency-based. Net profit likely to grow just by about 7.5%. Pidilite management has constantly said that they aim and aspire for double-digit volume growth. So domestic volume growth seen anywhere between 8 to 10%. Margins will compress owing to crude and currency. An important input, which is VAM, vinyl acetate monomer, that one's increased by 18% in USD terms. If you take a look at it in rupee terms, would have been much more. So that is something which will impact their margins.
Okay, all right. Thanks so much for that, Mangalam. Well, we'll slip into a short break. Up next, we'll tell you all the cues coming in from the derivatives market. Stay with us.